Okay, guys, here we have part two of this video series that we're doing on the stock market and the coronavirus. So now that we got kind of the intro out of the way and some disclosures out of the way, let's dive right into the purpose of this series. Now, we're going to be using Yahoo Finance as the tool to perform our analysis here. The URL is up here, finance.yahoo.com. To be honest, this isn't the best website. It's pretty slow, pretty glitchy, but it's really easy to use, especially for a novice or beginner investor. So we're also going to be covering some methods and ways to analyze investments without complicated mathematics. And for our discussion, we're going to be focusing mostly on ETFs, which is an acronym for Exchange Traded Fund. Now, if you're familiar with mutual funds, it's kind of the same concept, except that ETFs are traded on the stock market. Now, for our intents and purposes, you can think of ETFs as an ownership in a pool of stocks. So each share that you're buying of an ETF is an ownership stake in that pool of stocks. Okay. Now, as our baseline, we're going to use the SPY. SPY is the ticker. This is an S&P 500 index ETF. So this fund is a good way to buy the stock market. However, we're going to talk about three different categories of ETFs that I think, as I said in my first video, can be pretty good and that I like for people with a wide range of investment objectives. Now, the three categories are going to be growth, dividend, and large cap stocks. Large cap means large capitalization. So those are going to be your blue chips. So if you're not familiar with the lingo, blue chips are stocks that are large companies, well established, and have a history of performing pretty well. So if you want to think about your Microsofts, your Walmarts, your Disneys, those are good examples of blue chip stocks. Okay, so let's jump into our growth stocks first. Let's get rid of this. The first one we're going to look at has a ticker SPYG. It's your S&P 500 Growth ETF. So this growth fund is going to be a derivative of the SPY or the S&P 500. So this fund is similar, but is designed to include companies that are expected to grow a little faster overall than what's included in the SPY or the standard S&P 500 ETF. The second growth fund that we're going to look at is a Vanguard product. Vanguard is an investment company. The ticker is VUG. Okay. So in our analysis, we're going to first look at the performance. Performance is going to tell you how the stock has appreciated, or in some cases declined in value. So we're only in March. So since we've had this coronavirus crash, obviously we're going to be negative year to date. So this is from the beginning of the year. So in this case, this fund has lost about 5% since the beginning of the year. Now, we want to use our SPY as the baseline, as I said. So if we look at it in relation to the S&P 500, it's actually done somewhat better. Pretty good. Now, if we look at the Vanguard one, it's actually done even better. Okay? Now, let's look at another metric that you should be looking at when comparing different funds or investments. Now, when we talk about the beta, we're talking about the volatility of an investment here. So the SPY, or the S&P 500 ETF, has a beta of 1. 1 means that this fund, this ETF, has volatility that's overall equal to the overall stock market. Okay, so now if we have a fund that has a beta that's less than 1, for example, our SPYG Growth Fund, it has a beta that's a little lower than 1. That means that this fund is overall going to be a little less volatile than the stock market. Conversely, if we have a beta, such as in our VUG fund, that's higher than 1, that means that this ETF is going to be slightly more volatile generally than the overall stock market. Now, in this case, these betas are very close to 1, so they're pretty negligible here. But as we'll see as we continue our discussion, that there are going to be some investments with betas that are going to be materially more volatile or less volatile than the stock market. So these are my picks for now for growth funds in this category. So we'll end part 2 there, and we'll begin part 3 with our analysis of dividend ETFs.